Good evening, everybody. It's Tuesday, March 23rd. Just doing our homework for the night, trying to get ready to tackle the trade. All right, let's take a look at what we have. We have a breakout on the S&P index, which we talked about last week, the pullback and a retest. So old ceiling, old resistance acted as a new floor. We've got 2 days of upward movement in price, 2 closes higher, and the market really made the breakout at the very last part of the day. The breakout on today's candle occurred in the last hour of trading and had a bit of energy to it, so it closed right near the highs, and in after hours trading it's dropped back a bit. We have a channel where the market is channeling, and we have the bottom of the channel is where we've been finding the support, and the top of the channel is where we've been finding the resistance, and we've got room to the top of the channel. So I would suspect that we see the market continue to rise up, and that would be for the next day or so. Now, let me go ahead and look at the volume with this. Let's point out the volume. The volume is pretty high. I mean, it's good strength and volume. It's not weak, so this has actually had some decent participation to it. So that being said, what are we worried about? Now, if you watch the previous videos, we've been talking about probable resistance zones out at 1200 and 1225. Let me get those placed a little bit more accurately. And let me take you from daily to weekly, just to make sure you're clear. And we're talking about the 1200 being a fat number and 1225 being a big old support zone in history. And this is a big number no matter how you shake it. As far as technical studies go, Fibonacci studies, wave studies, this is a confluence area. This is a big fat area, and the market is extremely overbought, but at the same point in time, the VIX is very low. So let's go ahead and take a look at the volatility index and point this out here. The VIX is low. So the old market saying is when the VIX is low, it's time to go. The VIX is traded down below the lows. It's down at 1635, and the VIX, it works kind of like a jack in the box. It'll crank down, and then it pops up. So when the VIX goes down, it gets low, it pops up. So now here we are down. In the next couple of days, weeks, we are probably more than likely going to see a pop up, which means the market's going to drop. Remember, the VIX, the volatility index, is negatively correlated to the market. And so when the market drops, the VIX rises up. And if you actually compare the charts, you'll see that the drops in the market are the runs up in the VIX. And there's one coming around the corner. We just don't know when, but watch it. For now, we're still bullish. We're cautious, but you need to have all your stops tightened up. Make sure you're locking in profits. And watch out for a sell-off because we've had a great run. Okay, so that being said, let's take a look at how to take advantage of the bullish movement in the market. Still very strong. Here's an idea on PAY. That's Verifone. And we have a strong upward trend, a stock that's pulled back down. This is a bullish retracement into a big fat number, 20. So we see a couple buy candles. And these candlesticks right here are buy candles with some heavy volume. So the heavy volume says we got a lot of participation, but because it closed up, that tells me it's buying participation more so than selling participation. And the volume would be considered up. So that is a pretty good sign. And the way you would trade this is you'd put a buy stop above the candle for confirmation, probably a stop loss down below the candlestick low. And in the near term, we'd be able to at least shoot for the high. This stock averages 80 cents a day. Now, that doesn't sound like a lot of money, but look at this. That is 0.80 cents per day divided by, call it a $21 stock purchase, divided by $21. That is 0.038. So that is 3.8% movement per day. That would kick the pants off of your savings account. All right, now, upside potential, if you're shooting for a 1 ATR target, knowing that it moves 80 cents, you're shooting for about 21.80 for the day traders. You don't get greedy. You just look to take the money and run. For the swing traders, you're shooting for resistance. And then beyond that, you'd probably shoot for trend resistance, which would put you out towards 25. Good chance to buy low, sell high. Next, WEC, Wisconsin Energy. It's pulled down into the trend support. The old resistance high could become the new support low. We have a buy candle closed higher today, and the trigger would be buy above the candlestick high. I would personally put a stop loss on this underneath the candlestick low. So I'd put buy stop limit above the candlestick high. Get yourself triggered in if it confirms up, and only if it confirms up. Let's go ahead and get rid of that and talk about the stop loss. Stop loss would go, I'd put it underneath the pivot low. I'd lay back off this thing, stay off of it, give it room to find its support, and then as it breaks up, we'll trail the stop up to make sure we lock in a profit. Speaking of which, let me grab a new chart and let's revisit Sohu, S-O-H-U. And I posted this last week and I got a comment. Somebody said, well, why didn't you? I would have taken it short. And they were thinking short because the weekly said bearish. And I said, okay, well, let's let the market decide. I don't know if I'm right. I don't know if you're right, but so far I'm right. There's our primary trend. Here's a major downtrend. And it looks like it's, ooh, that looks like a good short setup for the weekly chart. Looks like a good short setup for the weekly chart, and I'll concede that. Absolutely. For the weekly chart, if it breaks down, you can be selling it and looking to buy by the time it gets down to 50. Now, for the daily time frame, however, I had a really nice buy. It pulled back, and I was right for the short term, and the stock broke up above my trigger. My stop loss was down here. Now, the way I have treated this trade is it broke up. I was very happy the first day, and the next day I got the dark candle, and I got my stop loss up to what I paid for it. Now, I'm playing with house money. I've got $13 profit, so what? But I haven't been stopped out yet, and if the market runs up, Sohu might run up. And that's the reason I went bullish, is the market's been bullish. And I'm riding the trend because the trend is my friend. So I am anticipating, I'm hoping that this doesn't stop me out. And if it does, so what? I didn't lose. If it breaks out, I win. So I'm hoping that works out real well. Now, that looks good. We'll see how that plays out. Got another one out here on Quarter Lane Mines. Ran some scans, found this one. CDE had a breakout and a retracement. Now let me show you the primary trend. So let me go from daily to weekly and show you what I have here. You have a nice trend up that's forming, and we've got the old resistance support zone here. So we see old ceiling, new floor. And let's drop it back into the daily. And this is a double bottom, a breakout, and a retrace. And for you Elliott wave fans out there, this could be a wave 1, this could be a wave 2, and if we're lucky, we could capture a wave 3. Ride that wave and you might get a good run. Well, we've got a bullish engulfing after a hammer type candle. We've got 2 days of confirmation. I would have no fear in taking a trade on this. With an appropriate position size and stop loss, you can go ahead and buy it now. You've got your confirmation, so you could buy it at market and then put a stop loss below the market low because they set that as an intraday price. Let me actually show you something really interesting. Do you see this drop, slowing down, double bottom, breakout, retracement on the daily time frame? You'll have the exact same pattern down here on, say, a 15-minute time frame. And let me squeeze it in. Ah, there it is. It ran down, it dropped, it slowed down, it double bottomed, it broke out, it retraced, and old ceilings become new floors, so on and so forth. I'm hoping to see this get some energy behind it and start to run up. We'll see how it does. CDE, bullish retracement, looks pretty good. Okay, next. AAV, found this one, nice little bullish retracement. Again, this is a common bullish retracement theme today because I'm trying to trade the bullish energy in the market, watching out for a top though. Got to pull back down into where old support resistance zones are, into a nice little intermediate trend zone, the doji. Now the doji is the signal, and I'm already in this trade. I already picked it up. The doji, now I've got my 5-year-old trained to see dojis and hammers, and she can come and look at my chart and she can say doji, doji, hammer, doji, hammer. I mean, come on, my 5-year-old can see the dojis. So can you. It's time to get off your backside and learn how to trade. Please remember, all videos recorded for Tackle Trading LLC are for educational purposes only. Thank you. Have a great night. See you next time.